The Australian dollar has risen about 2% this week, inspired by an apparent jobs boom in the country. The Australian dollar and the Kiwi are the strongest G10 currencies this week. The Kiwi got a bit of a head start on the Aussie on Monday when the Ardern government announced that it had selected Adrian Orr as the next RBNZ governor, taking office in March. Adrian Orr has extensive experience in markets and in policy making, and that includes a stint at Westpac, New Zealand as the chief economist. Both the Aussie and the Kiwi jumped on Wednesday as the US dollar fell across the board. This was in response to the lower than expected reading on US consumer prices for November. The core measure, which excludes energy prices and food, rose only 0.1% in the month. The US dollar also came under pressure a few hours later after the Fed policy decision. As expected, the Fed raised its benchmark interest rate by 0.25% to 1.25% to 1.5%. Chair Yellen pointed to the strength of the job market and an expectation that this will help wages growth pick up and therefore allow inflation to move closer to the 2% target over the next couple of years. The Fed maintained its projection that the 3 interest rate hikes of 2017 will be followed by another 3 rate hikes in 2018. This should be supportive for the US dollar if it's delivered. But markets may have been pricing in a 4th rate hike projection for 2018 because the dollar fell in response. After the Fed meeting, the Aussie dollar was around 76.30. It then jumped to 76.75, a 1-month high after Australia reported that November jobs growth surged by an amazing 62,000. The unemployment rate remained at 5.4% though, because there was an increase in the number of workers joining the labour force. Jobs growth in Australia is now running at 3.2% year over year. In comparison, the strong US economy is creating only about a 1.4% increase in jobs. So we should be wary about the potential for Australia's pace of job creation to ease over the next few months. But for the time being, the job market certainly looks stronger. This reinforces the market's inclination to price in the risk of an RBA rate hike in 2018. Pricing for a hike by December 2018 is now up to 80% chance. A very busy week in global markets also included policy decisions by the European Central Bank and the Bank of England. They both held policy steady as expected and had limited impact on their currencies. Australia's official data calendar is now very quiet until early January when we see numbers on trade and retail sales. Internationally, over year end, there'll be a focus on the progress or lack thereof of the US tax plan, the Brexit negotiations, and also whether China has any policy surprises in January as they did 2 years earlier. In the next few weeks, we expect the US dollar to find support from strong GDP growth and an optimistic Fed outlook. This should see the Aussie dollar spend most of the next few weeks trading closer to 75 cents than to 77 cents. This is our final markets update video for 2017. We'll speak to you in 2018.